Hello, my friends. It's Robert Miner with Dynamic Traders Group with another video for our Twitter followers and our YouTube subscribers. We're going to take a look at a couple markets today. We're going to look at bonds and notes and the crude. The reason I'm taking a look at them because it looks like they're in an almost immediate position for a very specific trade opportunity. We'll go over that. Now, before we get started, I do hope that you listen to the videos of the last few weeks. I did one on gold, detailed a gold trade strategy. That's been triggered. It's not too late though. Go back and listen to that video if you want to see the setup. We're just in probably the initial stages of that trade that I talked about back then. Also, a couple weeks ago, I did the euro and the dollar. Also, that trade got set up. It's already quite profitable. But once again, we're just in the early stages of the trends that I talk about in those videos. So take a listen to them and develop a trade strategy. Okay, let's get started. We'll start out with notes. And we're going to identify a very specific trade probably will be set up and triggered in the next few days. Let's take a look. Well, let's start with a long-term position and work our way down. This is the monthly data for notes, and it's the futures continuous contract. So every bar on here represents 1 month, and it begins back in March 2020 and comes down into this low last October. And in Elliott Wave terms, this is a 5-wave impulse trend, and it completed that bear trend for the March 2020 high in October 2023. What that means is more than likely, at least, bonds and notes are going to be sideways up for several months and more than likely into 2025. So that itself is a useful piece of information. What that represents, because we know that bonds and notes trade inversely to interest rates, that means that more than likely we've seen a peak in interest rates for the next year or more. So interest rates not necessarily will come down strongly, but in October, more than likely, that was the peak for several months, maybe even a year or so to come. That means bonds and notes are likely to be sideways up for many months and probably well into 2025. So we want to be oriented to identifying setups for, in this case, a long trade in bonds and notes. Let's go to the weekly data, and then we'll even get down to the daily data. Now, this is weekly data, and this is just from May 2023. Again, these are the continuous futures contracts. Here's what I want to bring your attention to, is the advance off the October 2023 low. This is what we call an impulsive advance, and that's what it should be, because impulsive advances are in the direction of the higher time frame trend. In fact, that was a nice 5-wave advance. Those of you who subscribe to our DT reports recognize that. And also that this decline is very much a corrective pattern. What happens when a correction is complete? The higher time frame trend that was in force before the correction then reasserts itself and continues to a new extreme. That means when the correction is complete, notes should continue to well above the December high. Again, more than likely, they'll continue net bullish into 2025. So here's where we're at as of today. I'm recording this on around noon time on Monday the 26th. So this little last bar, that's today's bar. Of course, trading isn't finished for today yet. But this decline certainly appears to be corrective. And as of last Friday, it tagged a 50% retracement. So that's a typical price target for a correction against an impulse trend. Happened to be right around, from Elliott Wave terms, the 4th wave extreme, but lesser degree, typical target for a correction. So we want to be on the alert for a potential trade setup here in notes. And let's take a look at the daily data and then see if we have a specific trade setup. This is the daily data. It's the closing data. I like closing data because I usually look for the closing triggers to initiate a specific trade strategy. So again, coming off the October 23 low, impulsive advance, corrective decline, and as of last week, last Thursday, the close was right on the 50% retracement and just a little bit above 162% external retracement of this potential little wave 4. So here's the trade strategy. When we see that a market's in a position to complete a reversal, is that then we have to identify what can it do to trigger that reversal, that reversal is complete. I call it a pattern reversal signal. Well, right now, at least, for notes, a daily close above 110.05, that's a little swing high based on closing data, probable wave 4, and a close above that would indicate that this correction is complete. See, I don't know if it's complete or not, but I do know it's in a position to have completed a correction. It's in a great pattern and price position, and it's near the extreme of a time position. So then I identify what can the market do to indicate that that correction indeed is complete. Well, certainly a close above a little swing high that breaks the bearish pattern. And that would be a specific go-along setup with a really close stop, because a stop shouldn't be any further than a tick below the recent low. And that's for the potential of an extended advance to well above the December high. So a lot of potential on the upside for a very small capital exposure if the trigger is made. I don't know if it's going to be made right now. It's just automatic. I've identified the position of the market and the specific trigger to get long. That's for notes. Let's take a quick look at crude oil. Before we take a look at crude, if you trade stocks or the stock indexes or index ETFs, I just came out with a new book a couple weeks ago called The Definitive Guide to the U.S. Election Cycle and Stock Market Trends. And I'm telling you, there's no other book that has even close to this information of specific trade strategies within each year of the 4-year election cycle. And it's the current version. We're right up to date for this current election cycle, which is this year and the next 4 years. So once again, it's available on Amazon. Check it out. If you trade stocks, this will be an invaluable reference for years to come. So this is the April crude weekly data. And so let's take a look here. We have from the September 2023 high, just this beautiful 5-wave decline. And that should be a wave A or wave 1. I got labeled a wave A coming off of the December 23 low. This is just a classic corrective pattern. And it's probable the best wave count anyway is an A, B, C, D, E. And here it's had about a double top around the 62% retracement. And the weekly momentum cycles are overbought in a position from where weekly highs are made. So what we can say about crude, it's in a really good position to have completed a correction. It hasn't triggered yet that it's complete. I'll show you in the daily data the specific trigger. And what we can also say before we go to the daily data is more than likely any continued upside should be very limited before that corrective weekly high is complete. So the reason that this is potentially a pretty good setup coming up here is that when this correction is complete, the bear trend should continue in crude to well below the December low. And boy, given the so-called geopolitical events around the Mideast these days, you would think that crude would be going through the roof. Well, it's doing just the opposite, and it looks like it's about to roll over and go down. I don't know if that's going to happen or not. That's what the position of the market says. This is crude daily data, closes only. Again, beautiful, impulsive, 5-wave decline into the December low, this corrective advance. We call these overlaps. We won't go into detail now. So what I look at is, well, now what can crude do to indicate that this correction is complete? Well, just a close below the February 14th close, which was at 76.36. That's the trigger that more than likely this correction is complete, and develop a specific go short strategy with a stop really close, just above whatever the recent high is prior to that entry. So entry, stop, probable target well below December low. Once again, what a great high probability, low capital exposure setup if crude makes that close below 76.36. And of course, you don't have to short crude. You don't have to do futures. You don't have to do options. You don't have to do highly leveraged. You can do something like this is a SCO. This is a ETF that trades in opposite or inverted to crude. So when crude goes down, this ETF goes up. Now this is again data through Monday. So what I've done is I just set up some parameters. This where my cursor is, that's Friday's close. A close above Friday's close is a go long setup. If crude were first to close below the 20 close or the low of the 22nd, that swing low, then I would have a different trade strategy. But it would not void that this decline is probably a correction, and I want to be looking for go long trade setups. It just would be the parameters would be a little bit different. Well, that's it for today, my friends. If you want to keep up to date 3 times a week, go to dynamictraders.com. Check out our DT reports where we update 3 times a week the markets we just talked about, plus most of the major financial markets. And also keep in mind, we're all about teaching you how to trade, how to make your own decisions, regardless of what market that you trade. So every week we give you some valuable practical trade tutorials. That's it for today. I'll be back in a couple weeks with another video. Everybody take care, stay healthy. Robert Miner, over and out for now.